no longer a flex in the market. That is what is sparking this conversation. When we have instances where the floor price, which is basically meant to protect lower OMCs, for instance, we have about 200 OMCs in the market, and with this price floor, they are able to price at a point where their financing will not affect their output in the long run. Unlike the big OMCs, who basically we have Star, we have Girl, and all of them being key players. They have the voice to speak in the market. When they speak, because of the market share they currently hold, their voice is quite dominant. Now that the meeting is ongoing, there's the option to review this particular price floor, because yesterday the MPA made mention that as for scrapping is not on the table, but a review is something that can be considered. But the objective of this is to ensure that there is no predatory pricing that would necessarily affect the smaller OMCs who have invested hugely in the whole value chain of petroleum.
Now, Caleb, this is the status of, our pumps, right? The ex-pump price we are seeing so far, petrol and diesel, and this is actually, we picked this data from, I think, the two big guys, Goil and then Star Oil. But if you actually go to the market, you can still find some of the OMCs who are actually pricing a little bit above this. But I've not seen anybody pricing relatively below that of, Goil and Star. I think Zen has also done some review and all of that, exactly. But, how did we even get here in terms of single digits fuel price? What has been the factors in terms of driving this down? And why are even some of these economic agents even expecting a further drop in terms of what we see so far?
We've spoken about it. Winston and I, we've done some work on the how fuel is priced in the country. Now, there are, I think, four main factors: the exchange rate, the price of crude on the international market, the taxes, and then the margins. So your margins are the profit levels the OMCs and BDCs put on the products. So these four main factors: exchange rate, price of crude in the markets, margins by the OMCs and BDCs, and then the taxes. So usually the taxes and levies are constant because the government barely introduces some midway. Sometimes, I think last year there was an increment of about 1 cedi on the price of for petroleum products, the increase in the extra levy introduced on the price of petroleum products. So I think the two main factors, the levies and the margins, are usually constant. The only thing that fluctuates a bit is the exchange rates and then the price of crude in the markets. Now, these two things, the exchange rates have been very stable, and even the cedi has even been appreciated against the dollar for the past year. If you look at the graph, you can see that it came down a bit from the highs of about 15 cedis to $1. Now it has dropped to about 10 cedis, 80 pesos to $1. From about 15, so 14.7 to 15, then it dropped to 10.8 to $1.
Yeah.
Then, if you look at the crude markets as well, crude was trading about 80% to about $80 to about $100 per barrel. Currently, crude is about $60 to about $50, $60.50. If it goes up, about $70 per barrel. So I think these two main factors, the price of crude and international markets, is doing very good for the country. Also, if you look at the graph for the exchange rates, from about the highs of 15 to now about 10 TDs. So if your exchange rate is doing very well, the price of crude and international markets as well is also doing from highs of 76 last year. In fact, there were points where it crossed $100 per barrel.
Yeah.
Now we are doing 60, sometimes even goes as low as $50 per barrel. And with what Donald Trump did in Venezuela, it's expected that the price of crude will go down further because Trump wants to increase the production of crude oil into the markets. He wants very cheap gas in the US, which affects Ghana as well. So the price of crude in the international markets, that's one thing. How our city is performing again is another thing, which is why we are seeing this reduction in the price of petroleum products on the markets. And the forecast again is that crude oil prices should go down further or remain very stable. And once that happens again, we should see further cuts in the price of petroleum.
Well, crude oil is expected to go down. The price on the global market is expected to go down. The CD relatively has been very, very strong. So if you look at the two main factors.
Also, gold prices are what's making the CD stable. And gold prices are going $4,800 per ounce. So we are looking in a very good position.
In fact, all of this points to the fact that we should be expecting a further, decline in fuel prices. But now that we have the price floor, in terms of the meeting that is actually ongoing, how to review the price, where do you think we should place the price floor, especially taking a cue from NPO, who is saying that, well, if you're talking about scrapping, there's no way we can scrap, we can review. Where should the next price floor be, looking at some of these data that we are looking at, Winston?
The price floor began in somewhere in 2024, 2 years ago, basically. And it was important during the case of deregulation. When we say we wanted to go full deregulation, we wanted the market dynamics to determine the prices. Just as Caleb had mentioned, the international crude oil price is falling. Projections is showing that the outlook always looks better for us as a nation because it will still keep dropping. Just this morning, we had cases of Iran. There's shortfall in production because of the unrest that is happening there. It should Trump decide to throw some nuclear bombs in Iran, it will certainly slow down production in Iran. Kazakhstan has a fire outbreak in some parts of their petroleum production centers, and this is likely to affect output. They are one of the biggest OPEC producers, including Iran, and this will certainly bring about the overall output in the short to medium term. And these are dynamics that are likely to change the outlook. But going forward into how we can ensure there is fair price, and the MPA consistently has said that this looks like a competitive price stabilization mechanism, the floor, which will ensure there's cool playing ground. But before the MPA decided to go this route, initially there were big players that were determining the outlook of the profitability in the market. And so these OMCs, first we had about 50 OMCs in the market until the case of overpricing came to light. Now with the price floor, it's meant to ensure the smaller OMCs are protected because some of them go for financing mechanisms to buy from international suppliers and also distributors. And these are to ensure that the range, the interest on it, the arrears are not built over time.
Yeah.
So with this mechanism, there's able to ensure the stability and predictability in the market where the banks can give out money quickly to these OMCs to buy for and certainly distribute to consumers. With that kind of analysis going forward, it's important for us to state that should the OMCs decide to call for a full scrap, then certainly there's going to be a key player. There's going to be a different dynamics of pricing, which will be based on what you can offer, the kind of services you provide, instead of the quality of fuel at hand. Because right now, it appears everyone would decide to go into oil marketing or let's say oil sales at the moment.
Currently, it's a little bit above 9 cedis. I think it's 9 cedi, 50% in terms of the price floor. So around
9 cedis, 80 pesos.
80 pesos.
Yeah. And then about 10 cedis, almost 11 cedis for diesel.
Where do you expect it to be in the next window, looking at the indicators we've looked at, the strength of the cedi, the outlook of the global crude prices, and other key economic indicators? You made mention of gold. We are also trying to, do gold refinery, inflow from gold, but the cedi will certainly be in a very, very stable position. Where do you see NPA and COMAC actually coming together to put the new price floor?
So I think we have to understand what the price floor is and how it's computed. So the price floor is literally the minimum,
barest minimum,
the barest minimum that you can sell petroleum products and break even. Never make a profit because usually they don't add the margins onto the price floor. So the current pricing window, the price floor for petrol, like we said, it was 9 cedi, 80 pesos. So this 9 cedi, 80 pesos for petrol. It means that if you get your petroleum from the BDCs, how much you pay them, the levies and all of that, everything together, the minimum you should sell is 9 cedi, 80 pesos.
Your cost should be equal to your revenue, right?
Excluding the premiums. You're not going to make profit on this.
Yeah, so they'll break even.
They're going to break even. But now the conversation that because the current pricing floor is for every 2 weeks. So we have a pricing window of 2 weeks every month. I think 1st to the 16th and 16th to the 30th of the month. So because the price floor is every 2 weeks, it's a problem for some OMCs because some OMCs say that within the 2 weeks, some global conditions can't make sure that they can actually reduce the price floor. So they can reduce the petroleum products in the market. So within the past 2 weeks, if you look at the crude oil on the market, the price has gone down a bit. The cedi has remained relatively stable, even though it has depreciated a bit. We started the year at 10.4, we are doing 10.8. So the cedi has gone down a bit. But then crude oil prices has been relatively stable and even in some markets gone down a bit. So the OMCs are saying that the 2 week time frame is too much for us. So either you scrap the price floor or make the adjustment faster.
The window.
Exactly. Right? So that when within the 2 week period something happens that we can actually go down, they go down. Because sometimes if it's about going up, you can go up on it almost on a daily basis. But coming below the price floor is a problem because you are bound to the 2 week window. if you go below the 9.8 for petrol before the 16th or the 30th of the month, you are breaching MPA rules, and then you'll be fined for that, I think about 200,000 or so Ghana cedis. So it's about understanding the makeup of the price floor. In the past few weeks, what's happened in the past 2 weeks that can actually make sure that you can sell petroleum products below the price floor. And now the other side of the argument is that if OMCs could actually sell below the price floor, then we should be seeing petrol selling closer to 9.8. Because so far, we've not seen an OMC selling petrol very close to 9.8. I think the closest we've seen is from JP, and they do about 9.89. And then Star is doing about 9.98 or so, and then Gold is doing 9.99. So the argument is that if this was possible, that you can actually reduce, petroleum products even further and even below the floor price, we should see more OMCs selling it at about 9.8. But you're not seeing that. So from the MPA and from GOIL, because GOIL is opposed to that, from MPA and from GOIL, they are saying that the 9.8 is not doable within this current pricing window. So it must remain. But then we also have to understand the makeup of the pricing window, the margins some of the BDCs put on it, whether it's too much, and all of that. So I think it's really, I can't really give a figure on how the price floor should be, but then it's more about the window, the 2-week window. Is it too much? Should they reduce? So I think that's really what's going to focus, the COMAC is going to focus on their meeting today, whether they should reduce or shorten the window period, make it maybe a week, 4 days, 3 days, to see if OMCs can actually reduce. Because Star was making a point that in 2022, there was no price floor, and then when we went as high as 23 cedis for diesel, when the world market started doing very well, Star was able to reduce the price on a daily basis because there's no price floor. But now there's a price floor. So even if you can't reduce, you cannot do it until we wait for the next pricing window.
Let's look at Star Oil's argument and just suppose that with market share, right? Because if you look at the two big players, it is Star Oil and GOIL. And in fact, this week we've seen, and since last week we've seen that, banter between the two of them in terms of where the actual price should be. In fact, Star Oil is willing to go below the current, price floor, and we have seen other marketing strategies from even some of the OMCs, including the breakfast you even spoke about and all of that. The key question I want to ask is, if you look at this, market share that we are looking at between the top two from GOIL and Star, look at where GOIL used to be, 21% versus Star of 4% in 2016. Now we are talking about Star Oil holding about 13% of the market and GOIL 11%. And so the key question is, should we actually look at this in terms of the price floor perspective, or OMC should go ahead and possibly use some sweetness to actually sweeten the deal for customers to come, like what we are seeing, the discount, the breakfast and all of that? Because the key concern is that you may be using discount, but if it is not across borders, if it's not national, you are not being fair to some of your customers. The question is, do you think that we can actually, push the whole conversation from the price floor and now start talking about the discount regime and also how we can even sweeten the deal for others to come to our stations?
That's a very good question. I'm of the view that in the next 3 to 4 years, Ghana is going to see an influx of supply of crude petrol in the market. The reason being that already we have Central Refinery in the country. The Tama Oil Refinery is back on stream. When they start refining our crude oil domestically produced and supplied, certainly we're going to see a lot of them. Already, Star understood the market earlier on. Most small OMCs decided that there's the need to ensure there's market expansion. So everywhere you pass in most stations across the country, you're either seeing a building going down, the next thing you see being demarcated, the following week before you realize a new fuel station has come to light. So people are seeing and anticipating that there's going to be a lot of employment in that sector. There's a lot of opportunity and huge investment is going into that. Ghanaians are owning the space with some few foreigners taking part into it. But the biggest one is GOIL. It's straight on the Ghana Stock Exchange. Last year, they did astronomically well. If you look at the share price compared to this year, it was quite interesting. But you're looking at how it's going to go into the latter part of the year. And that is from the financial perspective. With this, of the kind of investment going into the sector in this year, Star decided to expand its reach. And that gave it a competitive edge against GOIL. So if you look at from 2016 to 2020, the margin was very huge compared to when they began to meet in 2021. Don't forget that this period, that's when we experienced fall in crude oil prices.
Yeah.
But it appears that when things become to stabilize, with Trump coming into power, there's been a lot of conversation about the dynamics of the global crude oil movement, with some cases of him attacking Russia and Ukraine. All those conversations came to light. And that affected the pricing in 2024, when crude oil was selling around 15 Ghana cedis, and became a quite political conversation, even in our domestic terrain. It came out where Star decided to meet the margin at 15%, with Guel taking also 13.2% market share. And that was quite surprising when we announced here on JoyNews that Star is now the leading market share, considering how much they supply to the market, about 2.3 million liters per day in terms of supply to the market. Consumers are now saying, yes, they buy Star, and Guel also decided to also up their edge on the market, ensuring that their value on the stock exchange was increasing. So with that being said, the floor price with these two key players now battling, surely the ground went to elephant to fight and the grass suffers the most. And it's important that I believe the floor price is necessary for me, because don't forget, as of now, we have companies like the international oil trading companies, and also the bulk import, distribution, and export companies, that is the BIDEX, who are the main suppliers to these OMCs. And to protect supply to these OMCs, it's important that their investment are also protected. So their operation is basically to supply, and they do not have any floor price.
The banking sector as well.
Yes, they do not have any floor price. The BIDEX, the international trading companies, don't have floor prices, except the OMCs. So that means they can sell, and the benefit goes to the OMCs, who can discount at any price, because the pass-through effect is felt by the consumers. So the OMCs tend to make a lot of profit, because when they buy at a discounted price from the international suppliers, they have the liberty to determine how much they can give to consumers. And it's important that this floor price is good for the sector's growth, but for consumers, it's important to ensure that if government decide that they want to go food regulation in phases. It's been more than 10 years now since we started this regulation. It's important that we get to the point where we see its effect, especially now that we are seeing a drop in crude oil prices. Let's release it and let the water flow.
Let's look at Star Oil's momentum. And when Winston was speaking, I was actually looking at the charts. And one thing that I could deduce was the fact that Star Oil took the bullet in 2023.
Yeah.
When everything was going down for almost everybody. Everybody was pricing about 20 cedis per liter. Star Oil then decided to go below when there was no price floor. And Star Oil decided to take advantage of that situation and see how they moved.
That was just after COVID.
Exactly. From 2023 was when, or let's say you can even say 2021. But in fact, 2023 was when Star Oil got 11% of the market, 12.8% in 2024, and another 11% in 2025. So it means that when all others were above a certain level, Star Oil decided to take the hit. And that was actually what got them a lot of customers, because they were possibly, selling, if it's a quality fuel, and then also giving you relatively lower price. People were buying, they started expanding, like Winston said. But the key question I want to ask is, if you look at the top two, if their combined share is not even up to 30% of the market, do you think that is a good thing in terms of how, one person can actually get up, possibly review their price to control even the market? Do you see any sign that in the next 5 or let's say 3 or 5 years, you could have one OMC that will be back at the level where, Goyo was when they were controlling 20% of the market? Do you think that will stay here for a long time, where even the big two will only control just about 15% of the market share?
So I think when you see the graph, you can tell that Well dropped from 21%, they are now doing 11%. But Star has not reached about 20%, even 15%.
Yeah, never.
So it's not just Star that is climbing up, but then the other players in the sector are also increasing their market shares. And if you do the math, you can see that from about 2021 going, when gold was dropping, the other players were also increasing their volumes. So it's not just Star that has come to eat the entire market.
Yeah.
But then the other players came along with Star, and then Gold unfortunately had to take the hits. So the main concern is that before the price floor, companies were intentionally undercutting each other to get more market share. And then once that happened, some OMCs were unprofitable. But so the key issue is that how long can you sustain it? Because sometimes you can have enough funding that you can undercut the market, sustain more, more rush for your products, increase your market share. Then once you get the customers, you can start increasing it a little bit over time.
And then how do you even maintain them when you start increasing that a little bit and maybe it's very close to the next best alternative, right?
Exactly. And and fuel is also, to an extent, it's about loyalty.
Exactly.
Some people, even though Goil was doing very high prices, some people still went to Goil because they are loyal to Goil. Some people too started with Star. They say, I'm going to stay with Star, even though prices rise and all of that. So I think it's understanding the market. And the most important thing is that before the introduction of price floor, the price floor was also something that was introduced by the market players themselves.
Yeah.
Comac took it to the MPA. They took a paper to the MPA and urged the MPA to introduce a price floor, which the MPA did with consent from Comac. And then, the main issue is that because without a price floor, some OMCs are large enough to take advantage of that, the detriment of other OMCs. But as we show from the graph, it was not just one OMC that managed to overtake Goil. Other players in the sector had to come together.
Also the spectrum.
Exactly. So it's not just one OMC or a couple of OMCs that are going to overtake or capitalize on the entire market. It's about pulling the entire players along the line, which is why the MPA has insisted that the price floor, they've not thought of scrapping the price floor at this moment, even though they are open to negotiations and tweaking it to make sure that the entire market is happy with the conditions. So I think it's mainly about understanding that the price floor was introduced because some players were intentionally undercutting to get more volumes, put them away from other players. And then, so that also comes to another point to understand how these companies are being funded.
Yeah.
Understanding the funding structure of some companies, because some companies are too weak. If you don't put the price floor in there, they'll collapse.
Yeah.
And we need more OMCs. Winston said there are about 100 OMCs currently in the market space, which is good for us. There's variety. Once we all see that some OMCs, there's a cartel within some group of OMCs that you can see their prices are almost the same and they are controlling the entire market.
In fact, there are some of the small OMCs that even when Star and Goil are cutting prices, are still staying above 10 and 11.
Yeah. So it also comes back to the cost.
Yeah.
So Star and Goil, they are big enough. They can reduce their margins because they are selling
get more inventories before even the period comes.
Because they are selling more volumes. They can also take advantage of the low crude oil prices. They can stock up while crude oil is low. While the other smaller ones, they cannot do that. No, they cannot buy crude oil or petroleum products when they are very low. They cannot store it up and then release it onto the market as and when. They have to make sales, generate revenue, use that same revenue to go and import and all of that. So it's more about protecting the entire market, not putting too much focus on a particular group of OMCs and all of that. So I think the price floor, I don't think they're going to scrap it, especially because the Comac themselves took the OMCs themselves took the paper to the MPA, and in collaboration with the MPA, they introduced the market floor. So I think it's about tweaking and to make sure everybody's happy.
Let's look at
once it's back now, it's interested. They can't just take it out. Certainly, there can be review consideration,
like reducing the market, the window at which the price floor is.
Exactly.
I think that it's interesting. This is the first time we've seen. This is probably the second time we've seen these dynamics before the catalyzation when the deregulation was introduced. Because there were times that you get to there are certain OMCs who decide that this is how much we are pegging our prices compared to other OMCs, and those ones were affecting the market then. But with this new dynamics, I foresee what happened in the telcos happening now on the OMC market, the oil market, because the telcos now they had your bio data. Your birthday, hello, your happy birthday, they'll send you packages. Now the OMCs will likely be sending you full 4 tickets, coupons.
Next time you go to an OMC, you'll be expecting biscuits.
They already serve you watch it.
And this can only happen because we have a lot of players in the market.
Exactly.
And there's competition and all of that. So this is good for consumers that way.
Exactly.
They'll fight for attention and loyalty, basically.
My concern is even the economics of scale. That is what currently is not helping anybody to have a monopoly at the moment, because once you decide to cut, the key question is, can you even cut below the floor? You can't, right?
And stay profitable.
Exactly. So once you are cutting, you are also concerned about the next guy who is after you, because if you are cutting and the next guy is cutting and the next guy cuts to a certain point, how sure are you that you can cut to that point and still make profit, right?
That's what we hear of. You have to start laying off workers.
Because then we need to talk about the next window. But for me, the next window is very, very important, because there are still arguments that fuel prices should be below the current levels they are. So the final comments from you guys, I need you to predict, because meetings are going on. We know there will be reviews. Where do you think that the next, floor will be? I mean, I need that data. I need you to make that projection, because it's important. Consumers are watching. They are concerned. They want fuel prices to go down. There's a floor. MPA and COMAC are saying we cannot take it. We can review. So the next window, how significant can they review this price? Is it going to stay the same? Are they going to reduce it by a significant margin? I need your number.
Well, I think because an OMC is calling for the price floor to either be reduced or scrapped, it shouldn't mean that there's a way that the 9.8 figure can be low.
Yeah.
So, given an estimation, this is a rough guess, I think it should go below the 9.8 mark, because some OMCs are calling for it to be below that or scrapping the 9.8 figure.
Where do you want it to be?
So probably the 9.8 thereabouts, 9.8.
Exactly 9.8?
Yeah, exactly 9.8 for petrol.
I'm always going for the cheapest. Let's go for 5 cedis.
I need to
why I'm saying that, basically, 8 will work.
8?
8 will work at the moment, because all the factors that determine the pricing can change in an instant. And now the fear will be, what happens if global price goes up all of a sudden, and CD decide to dance the way it wants to dance and mix its old ways, and the economies decide to shift in other tandems or dance to a different tune? What happens to the sector? So they have to also think in the future in terms of ramification, basically, way forward. 8,
still around 9.8. I'm actually expecting 9.5, somewhere around 9.5 to be the new price floor. But we simply do not know where it will be. But definitely, consumers are calling for further reduction in the export price of fuel. This has been Beyond the Numbers with me, Isaac Kofi Agyei. I did this with
Winston Tackie
and
Caleb Ziblim.
See you on Friday.
Fun fact, do you know that the Kwame Nkrumah Mausoleum